Hello, good evening. How are you? Welcome to this first meetup of our group, Stock Investing Meetup in Farmers Branch, Texas, which is just outside Dallas, Texas. Our goal is 50% ROI, and a little bit later, I'm going to show you the estimates for the stock picks that I have for you today. After that, I'll throw open the meeting for discussion. You're welcome to voice your opinions and ask questions. And that way, we hope to have a robust, energetic back and forth and trying to understand better essentially how to make money in the stock market, which is the bottom line. So today is Saturday, December 29, 2018, at the tail end of this year. So my name is Neil Diodar, and I'm from New York City, but in Dallas for about 5 years now. What we are trying to accomplish today is basically three things. I'm going to cover these three things. The idea that the main objective of any activity in the stock market, the main goal is to make money. So very often, many of us get embroiled into the academic discussions, the noise surrounding movements in the stock market, the financial markets in general. There's so much information floating around. There's the news. There are reports of how the economy is doing, what the Fed did or is going to do, what experts are anticipating might or might not happen, the GDP, the unemployment rate, the trade balances, all kinds of things. And then there are other countries that affect our economy here in the US. So there's just a ton of information floating around, and it becomes difficult to find the grain, separate the chaff. So the main objective is to make money. So keep that in mind. That's how I try to approach it. That would be my suggestion. The second thing we'll talk about very briefly is market uncertainty, how to best navigate uncertainty in the markets. And finally, we'll take a look at some specific stocks that I have researched, and I have some positions on all of these stocks that I'm going to tell you about. You don't have to follow my lead or the choices I've made, but I'm just going to try and show you which ones they are, what the rationale was when I picked these stocks, the research that I did about these companies, the sectors of the economy, and then we'll compare. That's the whole idea. We're going to keep track of these stocks. It's the end of 2018 today, roughly, almost. And we'll keep track of these stocks. Let's see how they do. Each month, the last Saturday, we have this meetup. So we'll take a look, we'll keep track, and hopefully by the end of the year, we should have achieved or attained our goal, which is at least 50% ROI, return on investment. And that's on an annual basis. So my time horizon for all of my investments that I'm going to show you today are 1 year. That's the time horizon for these particular stocks that I'm going to talk about a little bit later today. But of course, your time horizon can be different. I mean, you need the money for, I don't know, to go on a vacation 3 months or 6 months from now. So you want to make some, make some fast money. So your time horizon is going to be shorter. You're going to pick stocks that hope to give you an yield, a return in 3 months or 6 months. Or at the other end is you're planning for retirement, way further, depending on your age. So obviously those stocks are going to have a much longer time horizon, much further away, 10, 20, 30 years. So we'll talk very briefly about time horizon. And you can note these stocks. You may want to just track them. You don't have to take a position in them. Or if you like, I'm not recommending them, but if you wish, you can take a very small position, because that way it's almost like a reminder, because then you're going to look at it, right? Just a very tiny amount. If you wish, you can do that. And that way it will kind of force you to look at it every month or, every couple of months. So that way you'll keep track of it. Okay. All right. So that's going to be what we hope to cover. It's going to be a pretty short session, my presentation anyway, and then we'll throw open the meeting for discussions, and you can talk about certain stocks that you're looking at. So we'll leave it open for that. Okay. All right. So in all of your activity in the financial markets, all of your investment activity, the only question really is, are you making money? So sometimes we tend to lose sight of this central idea, the central reason, the main reason why we are doing all of this in the stock market or in currencies, the bond market or commodities, indexes, all kinds of investment vehicles. The reason is we're trying to make money. So keep that in mind. Sometimes we tend to lose sight of that, and we get engrossed into these other discussions and the academic. And, I'm not a professor. I just want to make money. I have very little interest in talking about it, discussing it, and dissecting it. To some extent, you need that, because if oil prices, for example, are going up, crude oil, which industry is it going to affect? Well, airlines, for example, their major cost factor, if you look at their income expense statement, the main cost in their all of the operations costs is the cost of aviation fuel, which of course depends on the current price of crude oil. So that is a correlation. Crude oil prices may affect the airline business, so obviously it might affect their stock. So yes, you do need to keep these things in mind. But what I'm trying to say is sometimes we tend to get too deep into the academic discussions, and that doesn't help you very much. Okay, so the main point is, are you making money? So as I mentioned a few minutes ago, you can follow these stocks that I'm going to talk about just a little bit later. If you wish, you can invest a small amount in them, just as a reminder, so you can be prompted to take a look at those stocks. And then the key thing is, whether you buy some stocks or not, the main point is that examine the results. Are we getting an yield that we hope for? And in a year's time, hopefully that's going to be at least 50% ROI on an annual basis. So the next meetup is going to be the last Saturday, as I mentioned, same time, same place, 3 to 4:30 p.m. here in Farmers Branch, Texas, which is just outside Dallas, Texas. So Saturday, Jan 26, 3 p.m. So please hit the RSVP and we'll meet then. So talking about market uncertainty, most people have some of these responses when they feel they don't kind of know what's going on. So some are optimistic, they're hopeful, they do nothing, relaxed. Some might panic and they just close all of the positions. They just get out. And others, I think a lot of people fall in this category. They worry. Should I do this? Should I not? Should I stay in? Should I get out? Should I liquidate half of my positions? They worry, they lose sleep. So I think, in my opinion, most people probably fall in that category. And uncertainty is a fact of life, much like we're going to have hot weather, cold weather, there's going to be snow, ice up north. So uncertainty is a fact of life. We don't have a crystal ball. So what are we going to do? So how do we navigate that market uncertainty? Talking about navigation, let's say you were planning to sail from some point. So before you leave, you're going to make sure you are equipped. Do I have the navigation equipment to make sure I don't get lost? Do I know what the weather is going to be? Do I have the forecasts? Is there going to be a storm? Do I have enough food and water? If I need to call for help, do I have a radio or satellite, some communication? So the idea is that's what you can do. Anticipate, look ahead, and be prepared. So to overcome that market uncertainty, one thing you can do, which is reliable, is anticipate and prepare for that. Another way to overcome that market uncertainty is to have many shock absorbers. If a car has 2 shock absorbers, yeah, it's fine. But if there are 10, it's going to be better. If there are 20, that's even better. So another way to overcome that market uncertainty is to have many shock absorbers. So in our financial markets, in investing and trading, it's having a basket of distributed investments. So the old saying, you don't put all the eggs in one basket, the same idea. You put some of your investments in, let's say, different sectors. So some of them are in the energy sector. Some are maybe in the transportation sector of the economy, the sectors of the economy, energy, transportation, healthcare, and so on. Within that sector, there are several industries, like in healthcare. So, hospital chains, pharmaceutical companies, they're still in healthcare. Medical equipment manufacturers, they're in healthcare, but that they're in the medical equipment industry. And then within that, of course, there are many companies. Like the sector is transportation. In that would be airlines, trains, bus companies, and so on. So airlines, the airline industry, Delta, United, American, different companies. And then you probably need to invest to diversify some large company, large capitalization, and some small, like regional airlines. They're smaller, and if they're listed on a stock exchange, then you can diversify. That's the idea. You get a diversified portfolio, the same idea as having many shock absorbers. And another way you can also diversify is having different time horizons. So quick returns, or maybe medium term returns, or long term. So put some of your investments in short term, some in medium, and others long term. So that way you can absorb the shocks. In other words, if you know this stock is good, it's a blue chip stock, this company has been around for 100 years, they're not going anywhere, they have tremendous assets, their balance sheet looks excellent, they have 80,000, 150,000 employees, worldwide operations. Okay, but right now the stock is down. Fine. So that's a long-term investment. So you're going to take that for 10 years, 20, 25 years, and you can be assured that it'll do well. So the idea is to also diversify in terms of the time horizon. So this time horizon, you've probably heard of high frequency trading, which is done by using very powerful computers, and they have algorithms, it's high tech thing. Quants, they call them. Quant, short for quantitative analysts. So anyway, with these powerful computers, they just have it a position for a few seconds, as little as a few seconds. And then day trading is 1 or 2 days. Short term could be weeks or months. The definition of short or medium term, these things are not written in stone. Different people, have different kind of frames, but that's fine. So you get the idea. Medium term and long term, like for your pension funds, retirement funds, very long term. So this is how you can diversify your portfolio. And we come to the third part of this presentation of mine, which is to tell you a little bit about the stocks that I'm currently holding. I just took them a few days ago, so the entry price is roughly around where I got in. December 29th is fine, so it's right around where I went in. So there are 18 stocks, and the goal is to get a return on investment of 50% at least. So you can jot these down if you wish, or just keep track of them, or take a small position if you wish, just so it helps you to keep track. And then, more importantly, check on that to make sure in a year's time it does return 50% or more. Okay, so this is a 50-year-old company. Began with encryption and radio way back, and then now they've moved into digital encryption. So this is where the current price stands, and in my estimate, in a year's time it should hit 9, which is the take profit point. So now, to tell you about these estimates, how do I estimate where it will be a year from now? The way I go about it is to see the velocity over the last known history. So I go all the way to the monthly chart, or as long a time frame as I can find, and then look at the velocity that it normally has. Even if it spikes at some points, you kind of get a sense of the average velocity, and that's what it's going to do. Of course, at some points, it may linger in a narrow band, or it might just move more slowly. That can happen. So all that is taken into consideration. It's baked into these estimates of where it's likely to be a year from now. So the cash value is at the end of a year. Okay. China Mobile, of course, in the mobile business, it's at 47.60 at market close. So a year's time, 80. You get the idea, right? So I'll go a little bit quicker because you get a sense of where it is now and where I expect or estimate it will be a year from now. The take profit point. Denbury is headquartered, I believe, in Plano, Texas. Oil and gas. .3D system, so everyone needs it. I mean, not everyone, but like designers, manufacturers, even medical, to be able to see things in 3D. So, or perhaps even the movie business, I'm not sure. So they're about $10.10. I expect a rise to about 30 in a year's time. Tata Motors, a company based in India. It's a conglomerate, a long history, 100, 150 years. I don't know exactly, but it's a conglomerate into locomotives and steel and iron and hydroelectric power generation. They're all over. So Tata Motors is one of their kind of subsidiaries, I guess. And they own Jaguar and Land Rover in the UK. So it's at a good entry point at the low end, around 12. So I expect it to touch 36 in about a year's time. Tilly's, these are consumer goods like, I guess, clothing and all kinds of stuff. So that's just a regular. But it's a good entry point, in my opinion. This is just a restaurant chain, which is also at a low point. And what I'm looking at here is how much lower can it go? Either the company, not just this company, but any company, if it's at a very low point, three things can happen, basically. The company can either fold, forget about it, down the drain, bankruptcy, Chapter 11, whatever. Okay, done. Money down the drain. One. Second option, what could happen is a larger company can acquire this company if this target company has assets, they have goodwill, they have a good reputation, they have so many employees, they have a good demand for their product, they have a good operations team, everything's fine. But the stock price happens to be at a very low point. So the acquiring company, the larger company, says, this looks like a bargain. So they might acquire that. And obviously, you'll get a premium in most instances. So that's something to keep in mind when the price is at its lowest, hovering in the neighborhood at its lowest, Container, they have products that help people do storage, kind of boxes and closet stuff and stuff like that. Biomedicine, especially in the cancer area. So it is at a very low point on the pattern. So makes a good entry point. These people, they have spas in airports. I think they plan to build one or have in Dallas, DFW, if I'm not mistaken. So it's 15 cents, penny stock, but it's something to acquire as part of your diversification. Longevity, these people have more than 100 brands that they offer. Things like organic foods and skin cream, specialty coffee, things like that. So they're on the rise. I think it'll go to 25 or more. So my target is 25. Around that. Doesn't have to go exactly there, but in a year's time, I hope to liquidate these. This company is again in oncology, so cancer-related medicines at a good low point. Recon, this is a company in China, but it's listed on NASDAQ in New York. So they have specific technologies for automation geared for the petroleum industry. Westport, this company is somewhere in the Northeast. A professor, if I'm not mistaken, a professor of physics, maybe something like that. He was trying to figure out how to convert diesel engines into LNG, liquid natural gas. So he used the university facilities and labs and all that, and he was able to do it. So they started that. And then Cummins, which is a well-known company, manufactures engines, Cummins. So they partnered with them. And now these engines are used all over in factories and power plants, and car companies are, making deals with them. So anyway, that's an interesting history. Westport. Again, it's at a low point. So my expectation is that it will continue to rise. This company does robotic surgery. I mean, they offer products that helps with robotics. So it's kind of light. It's not deeply invasive surgery. So it's kind of, more shallow, especially I believe in the abdominal area. So robots help. And so they have those products at $1.22 at market close, targeting for 13. This company, Real Goods, they have these rooftop shingles that have embedded photovoltaic cells. So in other words, the shingles themselves become solar panels. So it looks like a normal rooftop, but in the meantime, it's gathering solar energy, gathering and converting solar. So I see good potential here. They recently got their certification, the safety certification. What is it? UL? Yeah, Underwriters Labs, UL certification. USA Technologies, they have point of sale for self-checkout, and they do the payment processing. So if you go to a vending machine or a laundromat or a car wash and, you insert the card, self-checkout. So they have the payment processing for that. Rave, this is a restaurant, pizza joint, a chain of joints, Pizza Inn. So this company is headquartered in the Colony, which is not far from Farmers Branch here in Texas. So around 76 cents. People like pizza. I don't know. Either it's going to get acquired or go bust or rise. I'm hoping it'll be the third option. I expect it will rise. So that's it. Those are the 18 stocks that I currently have positions in, at least in this portfolio. So let's take a look at the calculations. Let's say you buy one share from each of these 18 companies, and that just makes it easy to calculate, right? I mean, you can buy 100 shares, 1,000 shares, but just for easy calculation. One share of each company. So that would add up to $118. And to add up all those estimated take profit points, if you add those all up, it comes to 236. And of course, that is an estimated take profit point. It could be a little lower, a little higher, But then again, I explained the rationale, the reasoning behind how I arrived at those take profit points based on their normal velocity. So as I mentioned before, it could move slower, it might linger in a narrow band, but that's my estimate as of now, and that's what we're going to see. So this is way more than 50%. So even if it does half of what I'm estimating it will, we should, at least my portfolio, this should get an yield of 50% or higher ROI. Okay, so that brings me to the end of today's presentation. I'll throw this meeting open for discussion, and if you have any questions, I'll be glad to answer, and I'll ask some questions myself. So my presentation is done. If anyone else would like to come up here and talk about anything, that would be great. Okay, so the next time we're going to meet is Saturday, Jan 26th, 3 p.m. here in Farmers Branch, Texas. And also wish you a happy new year, 2019. Thank you all. Thanks. Okay, thanks.